All right. Hello. Welcome to today's webinar. It's your host, Avin Savani, from the Savani Real Estate Podcast and YouTube channel. I'm just going to talk today a bit about raising capital and syndication. For those of you who are unfamiliar with this process, it's essentially a partnership agreement between the GP, who is the sponsor of the deal, and the limited partners who provide the capital. So this capital could be used for just about anything within the project. It could be used for the down payment, construction costs, the acquisition costs. Just depends on how much capital you're planning to raise, right? So more than often, it's usually for down payment and closing costs. Other times, if it's kind of a smaller size deal, then the limited partners could provide all of the capital for the entire project cost. So it depends on how much capital the GP is also providing. So it's usually like an 80-20 split, where like the GP is responsible for 20% of the capital, LP is responsible for 80%. But it varies according to project and the way GPs kind of structure the deal. So essentially, what it's doing is that hey, good morning. Sorry. So what it's doing is that raising capital is a source of the deal, right? So you have your sources and uses of funds, right? The source would be the equity that the partners provide, and you're also responsible to report to them on like a quarterly or annual basis, and inform them how operations are running, how the construction process is going, and overall, like what is like the business model? Are you guys following the business model, right? So yeah. So basically, like before you even like start to attract investors, you have to put together like an investor pitch deck. So this pitch deck could consist of a lot of different things, from the actual deal, the return structure, the market data, the leasing activity, I guess, in the area, a lot of other good data points to make it a worthwhile investment to limited partners to look into. So I'm going to be walking through that like pitch deck template that we're proposing to pretty much put together for each deal that we go through, or a deal that's under contract. So that's another thing. You need to have a deal under contract before doing any of this marketing work. So yeah, so basically, I would think it's pretty much like a private real estate fund, but it's not really a fund. It's so it's under SEC's 506C and 506B guideline for accredited and non-accredited investors. So basically, if you know real estate investment trusts, that's like kind of regulated a little bit even more. On the public side and on the private side, it's a little bit more lenient, but basically, I would assume like right now, given the high interest rate environment, property values are slowly starting to decrease bit by bit as more appraisals kind of come in. And we're seeing, I guess, a different higher bid ask spread as well between conversations with brokers, but I would think that property values are kind of declining as of now. It's kind of in a stabilization period. Rents are also kind of stabilizing. You have weakening demand, and you just have to look out for contractor activity and more supply in the market. But basically, I think right now is a really great buying opportunity, in my opinion. If you have a worthwhile deal to look into, the underwriting makes sense, the returns make sense, your overall business plan makes sense, and the feasibility of the returns and the exit strategy, all of that stuff kind of aligns, then it's a really good buying opportunity, especially if you buy right, then the returns over the long term could really benefit you. So that's something to also present to investors, saying that, hey, given the downturn of the market, we're trying to buy this opportunity at a really solid price. We're thinking we can make the money on the buy, and really it's going to be a matter of just execution and making sure that all the teams and systems and processes are in place to run the business efficiently, right? So that's kind of where like our mindset kind of comes in. But let me just walk you through just the overall template for like putting together an investor pitch deck. Um, but yeah, so I would suggest if you are planning to raise capital that you use some type of software or portal, like a custom portal for your investors to like sign up on, kind of walk them through all of the agreements that have to take place. There's like the PPA, which is the private placement memorandum, or sorry, PPM that is. Then you have the LPA, the limited partnership agreement, and then the operating agreement as well. And overall, you can also attach a lot of like brochures or flyers that were made for the property, and kind of give them an idea of what it's like, how the area is, stuff like that. But this is a slide that I suggest that people kind of put together like on their own, and kind of source a lot of different like photos or sources together to create your own opinion on the deal. And you want to make the deal kind of stand out. So it always helps to kind of be in control of that aspect. So the investor pitch deck guidelines. Okay, so let's start it off. So opening slides. You have the company name with the logo in the background. Very important. So right off the bat, if you have like a nice opening slide that kind of presents, even you can put on the background like one of your properties, or say if you're in like one of the cities, you can put like your city background in the background. So it gives them a nice like intro to your company. So next is the managing partners and contact info. That's really important. So always label like pictures and contact email and phone number, so that they can get in touch with you if they're interested in the deal. Property summary and description, deal highlights and returns. So property summary and description, it's basically saying like why it's the hook line basically. So why should I invest in this deal? What is special about the market that presents a good buying opportunity? And the description should just be like basic things like square footage, acreage of the lot, units that are within the facility, and other good details that people should know about for the description, right? Parking spaces, the address, obviously, and other good things like that. The net rentable area, the gross buildable area, floor area ratio, some other things, good things to keep in mind there. So that's the description. Deal highlights and returns. So deal highlights would be basically like this is, you can put the hook in the beginning and then kind of explain it further through the deal highlights, right? So say like explain all of like your assumptions as well, like briefly just say like, oh, we predicted the rental growth rate in this area increasing by like 5 or 6%. We expect the operating expenses to kind of be mitigated slowly by slowly. And overall, the returns on the deal, you should mention the internal rate of return, the cash on cash return, the equity multiple. You can also mention the yield on cost as well, and other good returns that people should know about, right? So that's that. And then the market and property upside potential. So basically, from a rental perspective, why do you think that this property in the market is going to be able to endure that downturn in the market, right? So give good insights about the rental aspect. You can also mention that like leasing activity is really hot in this area. There's an influx of students or young generations, or the population growth is really increasing here. So those are some good things to mention there, but you'll probably get more into that into the market data section of it. And then mention like the seller's motivation, brief description about the seller, doesn't have to be like too long. And then the unique location, other upside deal structures within like, let's say you're doing a waterfall structure, you have like hurdle rates, basically like a promote. So basically if it increases to 15% or higher, then the LP is going to get more of the deal, or the LP and the GP, it's going to be negotiated between them, right? So mention those different deal structures in that opening slides. Next would be the geographical and market information. So this is something that I would also kind of pull sources together, like whether it's like reports from brokerage firms or other data reports from, let's say, National Association of Realtors, or Census Bureau, or apartments.com, some cool websites that you can get a lot of good data from. And you can also mention some economic, like, macro data. So whether that be like the Fed's interest rates, or like contractor activity, like permits that are being issued in the area, some good data that you think would be valuable for the investors to know about. So some I noted here, so it would be major employers and universities. So that's really important. So I think that universities have a huge impact. Institutional real estate kind of has a huge impact on all of the surrounding environment, the amount of families that move into the area, and more economic growth in that area. So I would take a look at the major employers and the universities. So say if like an Amazon warehouse is moving in, or like a big box retailer like Target, Walmart, Home Depot, Lowe's, like some huge real retailers coming in, because that's basically a magnet for a lot of different people to kind of live off of, right? So retailers have a huge impact on an economy. Net migration patterns. So basically, if your area is one of the areas where people just visit for like vacations or short-term stay, then you'll probably see like higher net migration patterns, people moving in and out on a more frequent basis. But overall, just see like, is it positive or negative? That's the ultimate thing you want to track. National rankings, that can also be for universities and employers as well. Supply and demand characteristics. So basically, how is the contractor activity? Are there more proposed or planned construction projects in the pipeline? And then how is also the demand? There's a lot of good sources for demand. The Michigan Consumer Sentiment, they do a great job of kind of the housing demand data figures. There's also just basic sources from National Association of Realtors that you can look into. Contractor developer activity. So again, that's another good thing to watch out for. So if you have some good data, which is kind of hard to find, honestly, of good contractors and subcontractors doing a lot of good projects in the area, that's a great source to include there. Restrictions from city, township on development. So that's another thing. There must be some like data where like you can track the average entitlement period within like a county. Like it could range from upwards of 6 months to even like 2-3 years, you know. So it all depends on how willing your township is ready to approve your project. If you have good voices in or good contacts within the township and city council, they can put a good word in for your project, right? So it all depends on that relationship with the city and township for your development. So yeah, proximity snapshot to employers and industries. So I see a lot of people like reports like offering memorandums and other reports online do this, where they place the subject property in like one area, and then they have just like a quick snapshot of like all of the different employers around town, and like a quick picture of their like logo, and that gives a good idea about like what's in the area, right? So I would highly recommend something like that. Major employers entrance into the market. So this is again talking about like the major moves into the market. So whether Amazon or Apple or another big, like the FANG stocks, right? Facebook, Apple, Amazon, Netflix, Google. If one of them like kind of moves into the area, everyone kind of raises their eyebrows, right? So that's kind of a good implication that there's going to be a lot more job creation, and there's going to be more people moving towards that city, right? So I would recommend that. Proximity to highways and transportation. That's another great thing. So railway access, and transportation, bus transit access. So all of that stuff is really important to provide, because people ultimately, they're not just living there to live there, right? They want to move around, they want to go places. It's just something that they can call home, and something that's an ease of access to a lot of different areas, right? So proximity to highways and transportation, that's really important. New complementary development, appreciating property values. Okay, so wherever you situated your development project, before you even like go through the acquisition process, I would highly recommend just doing like a quick scout within the area, like a 1 mile radius in the area, or one or 2 mile radius in the area, just seeing like what's happening in that area. And if it's something that you can envision people like, I guess, living there, doing business there, and kind of settling down there, right? So complementary development plays a big impact in appraisals and overall property values for sure. But yeah, so rent and sale comparables. So this is another thing. So you should be highlighting, you can use like your own software, like for on and off market properties if you have one, or you can also use brokerage reports from the offering memorandum as just like a quick snapshot into the rent comparables and the sale comparables, just highlighting like the sale activity in the area. If there are below market value purchase prices, that's a good sign for your investment. The rent and revenue growth potential. So basically, within any type of underwriting model, you'll have a lot of assumptions. So this is the rent assumptions, the post-renovation rent assumptions, the operating expense assumptions, the tax growth rate assumptions, the capex growth rate assumptions, right? So all of those assumptions you should explain and tell your investors like why you put it at like 4 or 5% as opposed to 2-3%, or like even higher than that, because you can pretty much like on any underwriting model, you can just tweak those like growth rates and like bang, like your returns will look good. You need to make sure that you're providing enough explanation for that, and not just like tinkering with like the model like that. So really, I would suggest that just make sure you're upfront about that, because it's kind of misleading if like you're just kind of tweaking those assumptions and not explaining it thoroughly, right? So yeah. And then obviously I mentioned apartments.com. Great site. They have a lot of good data. So even if let's see, like I'll show you guys the things that they do is I would say it's really informative. That's not it. Apartments.com. I spelled apartments wrong, didn't I? Apartments. All right. So they do a good job of providing a lot of good data. So for instance, this is like one development in my area. So just basic data: bedroom, bathroom count, square footage, monthly rent. They provide the floor plans, which is really great. As you scroll down, there's more description. So basically, whoever listed this on apartments.com provided a good amount of information that you can derive like either rent comparables, sale comparables on, right? So basically, they just have a quick few paragraphs here, unique features like the amenities within the building. And then, yep, awesome. So features, lease details, fees involved, other details, right? The location. See, this is like kind of going above and beyond like what you this is a lot. Like this is really good. So they have all the schools in the area. You can picture the restaurants, the grocery shops, coffee shops, banks, shops, fitness, like all of that, like even like I would recommend if you can take like this like picture right here, like this quick snapshot, and then just like label it, like either do it through like another editing website, and just label some of these areas which you think are the best, right? So that's that. And then colleges and universities, you have the main colleges there, public and private schools, transportation, awesome. See, transit, subway, community rail, um, airports, awesome. Big shopping centers in the area. So honestly, like this is it. Like this is really all you need as far as like a quick proximity snapshot, right? So all the shopping centers, see the walking distance, the driving distance, parks and rec, military base. And so yeah, so this is awesome. Like I would highly recommend just giving a quick search into apartments.com and utilizing this source for informing your investors how the area is doing, right? So yeah. And then basically brokerage reports also have a good amount of data as well. So if there's like a quick slide in there that you want to use, first obviously get permission from them to use their source, and then always kind of source it at the bottom, noting their name and the year that the source was created, right? So yeah, and then recent leasing activity. So other sources do this as well. Basically, they give a snapshot of like the retailers, the banks, or any type of office firm or someone like a startup company or someone else kind of leasing out space in that area, right? So leasing activity gives a good insight into how much demand is in the area. And ultimately that impacts also the bottom line rents as well, right? So yeah, or I should say top line rents. Rents are always on the top line. So yeah, next I would say lease points to keep in mind. So triple net, obviously, remember tenants paying for everything, taxes, insurance, common area maintenance. Full service gross, landlords paying for everything. So basically note the lease type that you're proposing, TI allowances involved, concessions involved, right? So those are good details to point about leases. Financials, so this is another thing. So within like any one of our underwriting tabs, like we keep a track of like the monthly cash flows and then the yearly cash flows as well, right? So basically the annual cash flow projections just and give like let's say a quick snapshot of that, and also give the debt terms on the property. So since you are using like their capital for like the down payment, the closing costs, they should be informed about the debt. So anything that you're using the capital for, you should inform them about. So be very upfront and honest about that. I think that also clears up a lot of confusion because from talking with lenders, sometimes they may request from all of the partial owners in the syndication to have like signatures on the debt, right? So always kind of close off like everything with any person upfront that needs to know about it, right? So with lenders, tell them about like your syndication process, how you're planning to raise the capital, tell them about the different people within the syndication, and then ask them that, hey, do I need any type of a letter from them or a signature from them about anything regarding the debt, right? So yeah. And then obviously I also said analyze the growth rate assumptions, the vacancy, the leasing assumptions. So yeah, sources and uses of capital. So basically on our underwriting, we have sources, which are essentially the debt and the equity, right? These are your main two sources of capital. And then your uses of capital would be, let's say, for the purchase price, the closing costs, the hard and soft costs, the construction budget, right? All of that would be the uses of funds. And then the construction budget, so yeah, I just mentioned that partnership level fees. Those would also be attached to yeah, either the sources or uses of funds. And then show the projected returns, like I mentioned, the IRR, the equity multiple, cash on cash return, overall profits. So yeah, and then required equity co-investment amounts. So what is like the minimum amount that investors can put towards this syndication. So whether it's $20,000, $50,000, tell them about that. And then waterfall structure returns. So like I mentioned, if you have hurdle rates that the LP or the GP can get promoted on, inform them about the waterfall. And then the preferred return, that's like what the LPs are asking up front, whether that's 6%, 7%, 8%, whatever that is. And then again, the promote structure of interest as well. So that's a basic snapshot of the financials. And then on a quarterly and annually basis, you can inform them with like a well-written report about how the property is actually performing, so that they can track the returns, they can track other metrics that they want to know about, and be more involved with the process, right? So that's that. And then the asset and property management plan. So this is really important. I encourage a lot of the limited partners, passive investors to ask about this too, because this is ultimately the execution of the project, right? So from the construction management perspective, handling the contractor, the scope of work, the draw schedule of their payments, right? Just inform all of the partners about like how the process is going to go, the development like tracker that you have kind of, and the ultimate plan that you have for property management, right? So I always, whenever I like go into one market, I screen at least like upfront. I just call around for 3 or 4 property management companies, just getting a good sense of their track record, their experience, and overall plan how they go about approaching property management, right? So yeah, and then I also I asked that, and then I also ask like the brokers or the lenders and see if they have any good trusted contacts that they've used for property management. If I see like 1 or 2 kind of popping up like the same time, you know, like one person mentions the same company as the other person, then I'd be more willing to learn more about that company, right? So yeah, and then overview of the software for rent collection, screening, leases and applications, tracking the quarter and annual KPIs, the streamlined financials and accounting, the marketing strategies through software, brokers, email, social media, right? So if you're doing it through software, a lot of good software actually just implements with like apartments.com, booking.com, other like popular websites for listings. And you can just do it that way, or you can do brokers as well. They will require obviously a broker's commission, but leasing commission is called. So just keep that in mind. And then the email marketing, that's pretty simple. If you have a solid CRM database of like a lot of good contacts, and especially people living in that area, then you can do some email marketing that way. And then obviously social media, you can advertise through Facebook or Instagram and attract people that way. So yeah, and then how to handle maintenance requests and keeping vendor relations. So basically this is a huge aspect of property management. I've explained this kind of further in one of my other videos, but this is kind of what makes or breaks the profitability of the investment. So basically the operating expenses on a deal can fluctuate, but I always like to see that it's below 50% of the effective gross revenue, right? So if it's anything above that, like I start to raise some questions about like the management's like their strategy about handling requests. Basically, is there a need for some of these items? What are you charging like the right amount to us, right? So all those questions, concerns would pop up then. But yeah, and then keeping vendor relationships. So keep a good database about like a good handyman that you can rely on, HVAC service, electric, plumbing, flooring, drywall, painting, all that, right? So yeah, and then the refinance process, quarter and annual investor reports and meetings. So I already mentioned that, but essentially The refinance process is kind of difficult to explain just like briefly like this, but essentially within any hold period, you're going to have like a stabilization month if you have a renovation budget. But on that stabilization month, I would assume that you're going to refinance the debt, right? So let's say you acquired debt in a high interest rate environment, and then a year later, let's say the debt is actually a lot less, right? And you should also coordinate and keep an eye out for the capital markets and see where treasury bills are, like the treasury rates. Keep an eye out for that because that also gets you a head up into the refinance process. So essentially, they're going to look at a good amount of information from the property, the existing debt, the DSCR, the different parameters, the underwriting parameters that you need to meet for the refinance process. But if you can get a better debt on a property, that's a big bonus. That's cash out, and that's more equity to provide to your investors, right? So yeah. And then the background on the sponsor. So the real estate experience, differentiating business strategy, the efficiency of operational systems and processes, similar properties owned, track record of investing and managing commercial real estate. So since we are like I'm kind of new to the industry, so I'm learning like as I go, really. But I've tried to do as much as I can to kind of dive right into it and learn all of the different like systems and processes involved. I've kind of taken a more operational and managerial role in this, but really I think it's a matter of explaining your business thoroughly, what you're planning to do. And you can also, if you're new to it, like just mention some goals, right? Like what are you trying to accomplish with this facility? What is your like long-term outlook, like 2, 3, 5 years from now, right? So that also kind of shows like the motivation aspect of it, and letting your investors know that you're actually a diligent person. You're willing to put all your effort and time into this and bringing about like a really special project, right? So I would really recommend just explaining like a brief portion on the background, and then yeah, so that kind of finishes it up. That's the investor pitch deck guidelines. So I know it's a decent amount. And obviously you want to make sure that your deal is under contract because you don't want to waste time and effort putting all together just for the deal to kind of fall out, right? So highly recommend that once you have kind of executed like the purchase and sale agreement and you're under contract, I would start this process. I could probably think that it takes maybe like a week to put the entire plan together, and then probably like a few more weeks with the partners to schedule Zoom calls, and ultimately provide the capital, right? So yeah, I think it's definitely the time is ticking when that purchase and sale agreement is signed. And now again, I think even like before the purchase and sale agreement is signed, you can tell like before like you go into a deal and let's say you submit the LOI, you get it signed, and you're having like really good conversations with like the brokers, the lenders on this, and you have like a solid term sheet in line, you're kind of on track to close on the property, right? So I would recommend just like starting it off. You know, you don't have to finish it. Like you can just do like the first few slides, like the market overview and the opening slides. And then let's say you do start to meet with your attorney to draft the PSA and you send to the PSA, then I would start to go deeper into it, right? So and honestly, this is all like already done, right? Like before you even go into a deal, you should have done like all of the underwriting, should have calculated all the returns, the waterfall, like the partnership level returns, all of that, right? So the financial portion is done, right? The asset and property management portion, that's kind of easy to explain, and that can kind of be consistent throughout like each process, right? And then obviously like background of sponsor can be kind of ever changing and adding more and more deals to your track record. Rent sale comparables, that's another thing that that you'll have to do. But really it's not that difficult. Like even like a 10 to 12 like page slide of your kind of report, that's also good enough. And obviously it matters about the content, but I think this is still doable for any deal. So highly recommend you guys kind of checking a template like this out. There's probably a lot more videos like on YouTube that kind of explaining it. But yeah, so if you're willing to kind of invest with us, please let us know. You can reach us through our website, argdesignbuild.com. And also you can just contact me at my email, which is info@argdesignbuild. So I'll leave all the socials down below, so you guys can get in touch that way. But thank you guys for watching. Stay tuned for the next video. Probably going to be doing either underwriting or asset management. So either of those two, I'll probably give a video next time. So appreciate you guys tuning in. Stay blessed. Happy holidays as well. If you guys are going for vacation, I'm very jealous, but thank you guys for tuning in, and hopefully you guys have a good holiday break. So appreciate it. Have a good day.